What are the prospects for the overall U.S. economy? I mean, obviously, this has had an impact on construction activity this year. Will it be able to avoid the double dip?
We are, in a sense, we are in a very subpar growth recovery. And as you may have heard, we're, in a sense, one shock away from another recession.
When Ryder, Levett, Bucknall looks across the nation, we see that the major cities that we look at are all in the bottom of a recession. Probably the one that looks to us to be coming out, the first or the ones, would have to be New York, Seattle, and Denver and Boston, those perhaps recovering earlier than the other cities.
And then by the third quarter here last month, when the data came in, the number dropped even further down to 37, with an indication from your perspective that with the fear of the default of Greece during this time period, the downgrading of the U.S. credit rating, those kind of same factors that are affecting the economy also affect you as a business.
Although the consensus view is that, yes, the U.S. economy will probably be able to avoid the double dip, but to be sure, the risks of recession have risen to about 40% from about 20% at the start of this year.
I think that where we are at the moment are the construction prices are depressed and are likely to remain depressed in 2012, barring some uptick in the general economy.
What we just went through was the worst recession since the Great Depression. And the only good news in that last sentence was the word was. It is over, according to the National Bureau of Economic Research, but unfortunately the recovery is not much better. That's indeed why I believe this recovery has been and will be for some time half speed.
2011, I've called it the summer of deflating confidence. It's a lackluster year leading into 2012, which I think is going to be more of the same due to concern about presidential election year and nothing much changing.
And we did see a few bright spots for construction, such as improvement for multifamily housing. We're in the midst of a surge of electric utility construction. Manufacturing plant construction has also picked up. But, you know, what we've seen so far in 2011 is that single-family housing has fallen back once again, and the diminished funding for public works and in the institutional building sectors are now taking their toll.
2011, I'm not expecting much better. I'm looking for something closer to about 1.7% growth. And 2012, I'm looking at a little bit weaker than that, at about 1.5%.
The number one, the fundamentals for the housing market are still relatively negative. Job growth is very weak. House prices have fallen significantly and are still unstable in many markets.
69% of them believe that within 3 years we're going to have a significant shortage of skills within this industry. And most people ask the question, well, why? I mean, you know, we have drop-off on workers, a lot of people unemployed, but a couple factors are coming into this equation.
I don't expect to see our unemployment rate in the United States, which is now at about 9.1%. I don't expect it to drop below 8% through 2013. And I don't expect to see the 6% or minus unemployment rates over the next 10 years.
You had a lot of architects out of work that went to find other jobs. There's a question whether many of them, or some of them at least, will return to the profession. You have the aspect of the baby boomers moving and retiring out of the industry. You have the aspect that the pipeline in the schools for future professions in that is lower than expected, so there's a concern whether these schools themselves will put out those professions. And then lastly, the younger generation, the millennial generation, does not have the same interest in the construction industry as we did.
You know, what is going to be the impact on major construction sectors, and what are we expecting, of course, in terms of the overall level of total construction for 2012?
First-time homebuyers that are seeing very affordable house prices, mortgage rates that are at record lows, so they will get back into the market when they sense the economy is getting better. And I think when they get back in, that's when we're going to see a much stronger housing recovery. Number two, we're likely to see the economic upturn and the housing upturn unfold regionally, beginning in areas where prices have stabilized and where the economy is improving.
The payroll numbers that came out for September showed certainly nothing spectacular, but again, it was a bit better than what markets had expected at about 103,000 new jobs added. This is in addition to 2 upward revisions for the prior 2 months that added a few more jobs to the payrolls. Some bit of good news.
Thirdly, the remodeling market although hard hit by historical standards, wasn't nearly as hard hit as home building, and although the recovery in home improvement spending, as I showed you in the recent slides, is still moving in fits and starts, it does appear that it's a recovery that can be sustained.
Another thing that was positive that certainly gave me a little bit more confidence that this recovery will continue was that we saw equipment spending hold up pretty well. Durable orders looked relatively healthy. Also signs that businesses are ignoring the bad headline news and the concerns with the government and continuing to invest.
This period of volatility has accelerated some needed changes in the construction industry that position us for growth and profitability. It's also been the catalyst for many of the changes that, frankly, this industry has needed to embrace for many years.